Now for more on peer-to-peer lending in China, I'm joined by Zennon Kapron. He's the Director of Kapronasia, a financial industry market research and consulting firm focusing on China and Asia. Thank you for joining us.
Thank you, Rachelle.
Now, what is it about this peer-to-peer lending that has caused it to balloon so much over the last years?
I think you really just need to look at the websites. I mean, a lot of these platforms were promising, high double-digit returns for investing, and for retail investing class of consumers in China that are looking for places to put their money. Some of the returns were quite attractive, and this is something that people have gotten used to since peer-to-peer lending platforms really started to blossom online in about 2010 in China.
Now, beyond the retail investing class, how has this trend affected the broader economy?
Well, I think one of the really positive aspects of peer-to-peer lending was the fact that it's more focused on SME lending, small, medium enterprises in China. So if you look at Chinese economy, a lot of these state-owned banks, which is pretty much all of the banks in China right now, tend to lend to state-owned enterprises. So the PetroChinas, the Costcos, the large Chinese companies, because they tend to be a little bit safer and there's this feeling that they're too big to fail. So the peer-to-peer lending platforms have focused a little bit more on small and medium enterprises. So when you look at a peer-to-peer lending platform in the West, in the US, or in Europe, it would be maybe somebody trying to use the lending to consolidate their credit card debt. But in China, it tends to be more focused around small and medium enterprises that might need short-term lending. So that's actually helped because China has struggled a bit with shadow banking and shadow financing over the past couple of years.
And one of the issues, as we mentioned, with shadow banking, we've seen that Yizhubao, China's largest peer-to-peer lending platform, has been making headlines for allegedly defrauding hundreds of thousands of Chinese investors. The approximate loss is around $7.5 billion. And now the owner of the parent company is calling it a complete Ponzi scheme. Is this an isolated case in China?
We really don't know yet. I think the other shoe is yet to drop on peer-to-peer lending in China. I think certainly the failure of Yizhubao, it's not unique in terms of what happened with that company. I mean, there are examples in all different industries in China of malfeasance and problems within the industries. But I think we'll probably see a little bit more consolidation within the industry. And certainly as these regulations kick in, if we look at what happened in payments a couple of years ago in China, originally, payments in terms of mobile payments and online payments weren't regulated in China. The regulators introduced a licensing system, and very, very soon afterwards, the industry consolidated and a lot of the smaller players dropped out. So I think there's probably a little bit more to see in the peer-to-peer lending space in China in terms of the consolidation and some of the smaller players dropping out. So indeed, we may see other failures similar to the one that we've just seen.
Now, in terms of paying the cost for some of these failures, obviously you have people really trying to look for answers both from these companies and from lawmakers. So in terms of the steps that the government is taking, what do you think they can do to guard against this situation repeating themselves? And what have they done?
I think the biggest thing is customer education. You look at the investing class in China, and we've seen it time and time again with the stock market. I was in China in 2007 and 2008 when we saw the bubble around that time, and we did a survey of about 1,000 investors, retail investors in Shanghai stock market. And then we revisited that survey over the past year, and the attitudes of a lot of the investors haven't changed. I mean, the average Chinese investor does like kind of a get-rich scheme or investments that promise quite a bit of returns. And so I think peer-to-peer lending is no different than that. I think there's really education that needs to happen around that. I mean, one of the shocking things that we found about what was happening here is that these peer-to-peer lending platforms were guaranteeing not only principal return, but the actual absolute return. So if you invested, say, 1,000 RMB, the platform would ensure that you got back that 1,000 RMB plus 15% or whatever they guaranteed on the platform. So when you think about that, that's pretty unsustainable, but people were buying into it. So there's a lot more education that needs to happen around that. So I think we'll see the government and the regulators really push in that direction beyond just some basic things like the 12 points that are outlined in the regulation to educate the investors.
Right, okay, so investors having to do a lot more homework there. Thank you so much for joining us. Zennon Kapron, Director of Kapronasia.